The Canadian Real Estate Association has just downgraded their forecast for the Canadian housing market in 2025, marking the largest revision they've ever made. Are they going to be right this time? Or are they just pumping the market so you'll buy more houses from agents like me? Hey there, welcome back. My name is Matthew Pfeifer, real estate agent. Regina, and my trusted assistant Matilda. She's not there because she's actually sitting on the floor chewing on a bone right now. But don't worry, I've got her question of the week, and it's a personal one about me. We'll be going through a massive foreclosure in Ontario, talking about mortgage arrears, what neighborhoods in Calgary are seeing the largest overbids right now, whether the Bank of Canada is going to be cutting interest rates or not. There are two competing narratives on that. We'll, of course, get you up to speed on this week's best mortgage interest rates. And yes, we're going to talk about that forecast from CREA where they've made a massive downgrade for their predictions for where house prices are going in 2025. Real estate bankruptcy involving hundreds of Northern Ontario properties enters final phase. This is a massive foreclosure sale going on. There's about 400 total properties that were for sale. And normally you'd think, okay, that's an investor to over leverage themselves. Now that interest rates have gone up and rents have gone down, that's why they're stuck. As the saying goes, when the tide goes out, we see who's swimming naked. Well, that is true in this case here a little bit, but also the investor was doing some, we'll call it shady stuff as well. But we do have foreclosures and mortgage arrears on the rise right now. And mortgage arrears are a leading indicator for foreclosures. So let's take a look at that right now. Right now, the mortgage arrears rate nationally is 0.23%. That is significant because it gets us back up to the all-time lows that we had been at pre-pandemic. I bet though, if you had told a bunch of people in early 2022 that the Bank of Canada is going to raise interest rates over 5% and they're going to keep them there, most people would have expected this to go up a whole heck of a lot faster and more. From last month, it's only an increase of 130 mortgages, about 11,000 total mortgages in arrears in Canada of the approximately 5 million mortgages in Canada. Anytime I'm talking about mortgage arrears rates, I'm getting data from the Canadian Bankers Association, which covers all of the big banks as well as a bunch of the monoline lenders. It does not count the credit unions, which typically have very similar rates, and it doesn't count private lenders, which will be higher. Up to this point, we had actually seen the rate of arrears slowing down through this year, but we did see a little bit of an uptick. We'll have to see if there's just a blip or the start of a new trend. Scotiabank sees 3 Bank of Canada rate cuts in 2026. I always love it when we're making predictions well over a year out because they're never going to be correct. Scotiabank, though, has a pretty good track record recently on their predictions for the Bank of Canada's movements, and they're expecting the Bank of Canada is not going to cut interest rates at all for the balance of the year, but there will be 3 quarter-point bumps in 2026. If the Bank of Canada does not cut interest rates anymore this year, my yearly prediction will be wrong, as I was predicting that the Bank of Canada would cut a few more times for the rest of the year. I think the Bank of Canada is going to drop its policy rate 1% from 3.25 to 2.25%. And we would continue to see variable rates hover around that low 4% range. Markets see 2 more Bank of Canada rate cuts as economy slows, survey shows. I found it interesting that these articles came out from Canadian Mortgage Trends within 1 day of each other. So we've got Scotiabank on one hand saying no more rate cuts this year, while you've got the rest of the big banks saying they're going to have rate cuts in 2025 still. Bank of Montreal and National Bank are saying the Bank of Canada will cut its key lending rate to 2%, which would be another 75 basis points in cuts. CIBC, RBC, and TD are expecting the Bank of Canada will end the year with its rate at 2.25%, meaning another 50 basis points of cuts this year. A couple of key takeaways is that they're saying there's a 40% chance that Canada will enter a recession this year. Only 40%? It might be higher. And that inflation will hover around 2.4% for the remainder of the year before dropping in 2026 to 2%. They're also expecting bond yields to hover around that 2.5% to 3% range. That would mean 5-year fixed rates would hover somewhere between 3 and about 4.5%. These 5 Calgary neighborhoods are seeing the most overbidding for homes. In a video from a couple of weeks ago, I talked about the top 5 neighborhoods in Toronto seeing the most underbidding. Show the clip. Buyers offering way under asking price for homes in most parts of Toronto. Now let's talk about the Calgary real estate market, where they are still seeing overbidding. Here's a spoiler from my upcoming monthly market update. Home prices in Calgary dropped year over year last month. Looking at this chart here, you can see that in these 5 neighborhoods, the overbid is only by a couple of percent, and all of these neighborhoods are more expensive than the average one in Calgary. Just because you paid under the asking price doesn't automatically mean you got a good deal, just as paying over asking price does not automatically mean you got a bad deal. Let's get into this week's best available mortgage interest rates. And unfortunately, it's a little bit of a boring week, but we'll start things off with insurable mortgages. The best 3-year fixed is through Radius, 3.99, unchanged. And the best 5-year fixed through MCAN, 3.89, also unchanged. Looking at the best 5-year variable mortgage interest rates, for a static variable, 4.25 through Manulife, that's unchanged. And the best adjustable is 4.15 through Marathon, also unchanged. Now let's see what the best rates are for uninsurable mortgages. You can get a 3-year fixed through Manulife for 4.44%, that's unchanged, while the best 5-year is also 4.44 through Merrick's, but that is a slight increase. Taking a look at 5-year variables, the best static is through TD, 4.69, and that is an increase, while the best adjustable is 4.35 through Merrick's, but a slight drop from last week. Now, if you want the best agent to go along with the best mortgage rates, look in the description of this video. There is a link to my calendar where you can book me in for a buyer's consultation. If you're in Regina, I'd love to sit down and have a coffee with you, answer any questions you've got about buying a house. But if you're somewhere else in Canada, I have a great network of agents where I can handpick a fantastic agent for you. Looking at the Big 5 banks' best 5-year insurable mortgages, no change in the leaderboard or rates. And here's something else that's unchanged. Another one of my terrible bad dad jokes. What do you call a mistake on a tombstone? A grave mistake. If you have a terrible joke I can use in the future, put it in the comments below.
Why do you look like Uncle Fester?
First off, Uncle Fester is way cooler than I am. But I have an autoimmune disorder called alopecia, and I was diagnosed with it originally in grade 2. The one cool thing that came out of it is I got to wear hats in school and even on picture day. It would fall out in patches and come back, and actually all through elementary school, it came back in different colors, and I had just about every color hair except for red. I still think it'd be funny if my hair grew back one day and it was red. And then in high school, it all started growing back, and because I hadn't had hair, I tried growing a mullet. So this is a photo here of me playing football, and I used to try to grow my mullet down to my name bar. But then in 2008, it all started falling out again, and the alopecia kind of morphed into full body alopecia. And I went from that mullet photo to this in 6 months. And as a friend once pointed out to my wife, she's the hairy one in the relationship. She doesn't like that. Canadian home sales drop as CREA downgrades 2025 forecast. Messaging going into 2025 is that it would be a rebound year. You could take it to the bank. And honestly, in January and February, that was starting to look pretty good. And then March and April rolled around. Both months have been very slow when you're looking at national numbers. But as you know, just looking at the national numbers doesn't give you the full picture of what's going on in your market. That's why I break down the cities individually in my monthly market updates. This is the largest revision they've ever made to a quarterly forecast. To start the year, they were saying that home prices in Canada were going to increase 4.5%, and now 0%. No increase at all. They cited tariff and economic uncertainty as the primary drivers as to why they revised their forecast down. And this is a good thing. As the information changes, they should be updating their forecast. That is why Roy LePage, Canadian Real Estate Association, RE/MAX, etc. all do quarterly forecasts. So can you trust the forecast from the Canadian Real Estate Association, and are they going to be right this time? The short answer is no, you can't. And you shouldn't. You also shouldn't trust forecasts from banks, economists, real estate companies, or even your favorite YouTuber, unless you subscribe. Then my forecast, guaranteed, locked in. And you can't trust forecasts from anyone else, family, friends, etc., because all the forecasts are just educated guesses on what people think is going to happen. Of course, nobody has the crystal ball to tell you exactly what's going to happen. As I've always said, the best time to buy a house is when it makes sense for your own personal situation. If you can afford the house, and it's gonna make your life better, that might be the right time to buy. But nobody can tell you when is that right time. Instead of trying to time the market up, focus on when it is right for you and your own personal situation to buy a house. Nobody can tell you that.